Welcome to The Explainer. Today we're breaking down the U.S. Federal Reserve's latest interest rate decision and tracing its ripple effects all the way from Wall Street to the wild world of crypto.
So you might be asking yourself, how can a tiny 0.25% decision cause such massive waves across the entire global financial system? Well, it all boils down to one single number that has incredible power over trillions of dollars.
The U.S. Federal Reserve is about to cut its key interest rate by just 25 basis points. But don't let that small number fool you. This isn't just another rate cut. It's a huge signal about where the entire economy is heading.
And get this is the third rate cut in a row. That's a really clear sign that the most powerful central bank in the world is making a major strategy shift, and it's moving hard to get the economy going.
Now, what's really fascinating here is that the market is so sure this cut is happening that if the Fed surprised everyone and did not cut, it would probably trigger a massive sell-off. So, in a weird way, the decision itself is almost a non-event at this point.
So this cut makes it cheaper for everyone to borrow money. Think mortgages, car loans, business loans. It's all about putting more money into the hands of consumers and businesses. It's basically the Fed's main tool for hitting the gas on the economy.
Okay, so if the cut is pretty much a done deal, what's the big deal? Well, the real story isn't the decision itself. It's the bitter, knockdown, drag-out fight that's happening behind the scenes at the Fed.
You see, inside the Federal Reserve, there's this fierce debate going on between two opposing sides, and each one has a totally different idea about the future of the American economy. On one side, you've got the hawks. They're terrified that cutting rates is going to let inflation run wild and just devalue our money. But on the other side, you've got the doves, and they believe we need more rate cuts right now to stop a recession from happening. This is the central conflict right at the heart of the Fed.
And the hawks have a really good point. Inflation is still running hot, way above the Fed's target of 2%. The split in the committee is so bad that some members are probably going to publicly vote against this rate cut. The whole idea of them being a unified team is really starting to crumble.
So just imagine being Fed Chair Jerome Powell right now. He's stuck in this impossible position. He has to go out and project this image of a united front to the whole world, even when his own team is completely divided on what to do next. Every single word he says is going to be picked apart.
Now, this internal battle at the Fed, it has massive consequences for anyone with investments. It looks like the era of easy money is finally ending, and a brand new, much more uncertain chapter is about to start.
For the past year, it's been a pretty sweet deal for big investors. You could just park your cash in super safe government bonds and get a great, almost risk-free return. But with this rate cut pushing yields down, well, that easy money train is pulling into the station.
And that kicks off this incredible chain reaction. As the returns on safe stuff just disappear, these huge pools of money, we're talking pension funds, university endowments, trillions of dollars, they're all being forced to go out into riskier territory to find a decent return. So where is all this money going? They're now looking at things like private credit, which is just directly loaning money to companies, and emerging market debt, which are bonds from developing countries. They're having to take on way more risk, all to get the returns they need to meet their goals.
And this desperate hunt for yield is naturally pushing some investors to the riskiest corner of the entire market, cryptocurrencies. And for an asset like Bitcoin, the Fed's decision could be the very thing that ignites a massive move.
Okay, so for the Bitcoin bulls out there, the first key number to watch is $93,300. If Bitcoin can hold this level and really make it a solid floor of support, it builds a fantastic foundation for a rally. The next big hurdle is what's called the 50-day moving average. It's a huge technical indicator that shows the average price over the last 50 days, and it's a massive psychological level for traders. Right now, it's sitting right around $98,000.
But the ultimate test, the final boss for Bitcoin, is the major resistance level up near $108,000. If it can actually break through that ceiling, it could signal to the entire market that a new bull run is on, and maybe, just maybe, new all-time highs are coming. So, here's the bottom line. You've got two scenarios. The bulls are trying to smash through that underneath $1,000 resistance, which could open the door for a big rally. The bears, though, they want to see it fail and push the price right back down to test those recent lows. The battle for control of crypto is on.
So the Fed's decision has basically started a global game of musical chairs, with trillions of dollars all scrambling for a new place to sit. The question isn't if the money's going to move, but where it's all going to flow. And the answer to that question will decide the winners and the losers in this brand new financial world.